You were listening to chartingwealth.com for Friday, the 19th of May, 2017. We see that stocks have rebounded a little bit. We see that the S&P 500 up 0.39% for the day. The Q's up 0.87% for the day. Gold is down, but bonds are up. Gold's down pretty decent at 0.82%. And we'll go ahead and shoot through these charts. Now, of course, price movement's not the only thing we're concerned about. We're, of course, charting, and we want to see what these indicators show us. We see that on the S&P 500 on the weekly chart, we have a spinning top at this point. Means lots of indecision after all this up movement being broken in the prior 3 weeks. And remember, the beginning of this week was another up week. Well, that, my friends, has changed substantially. We also see that the price percent oscillator is channeling down pretty substantially. And we see that the derivative oscillator is still losing downward energy. So again, what does a spinning top mean? Indecision, and that is what we are seeing. It is, again, our biggest indicator is the price percent oscillator, and the biggest chart is the weekly chart. All things being equal, the chart's always price movement always tends to go in the direction of the largest chart. That is down right now. Has not closed for the week, but we're still in a confirmed down move all the way since the chart rotated over back on the 31st of March. We did have 3 weeks of up movement. And remember, we kept hitting the 240 mark. I kept telling you the 240 mark is as high as the market is going. Right about 240 is as high as it's tapping out. And now we've seen this big down surge, but some recovery throughout the course of the day. If we look at the 2-day chart, what do we see? Well, we see that we had a down candle for the 2-day chart ending on the 17th. And then, of course, the 18th, again, we're using the Heikin Ashi candlestick. So even though it was an up day, average pace is down. So we don't have gap downs. Remember, the way that the Heikin Ashi work, they're calculated differently. But we do have that confirmed crossover, and the derivative oscillator has also crossed over going down. So again, we now have both the weekly chart and the 2-day chart moving in the same direction. Now, when we go to our standard way of dealing with these issues, what do? Well, we wait for a pullback on the 4-hour chart and then an entry point. Some of you may have jumped in using the 10:30 time frame to get in, but if you notice, things rose from that point. Our market opened down and then moved up from there. So again, our old way of doing it is jumping in when we have a pullback on that 4-hour chart. That's the safest way to do the entry point and the trend following. Again, I encourage you to experiment, try, see what works for you and what works for you in this environment. Again, everything in the market is always changing, and we encourage experimentation. Let's keep looking at these charts. We're next going to go to the Qs. Remember, we were in the Qs. Trade Qs up for the day 0.87%. We look at our weekly chart, confirmed up move on the weekly chart all the way back on the 28th. We had 3 weeks of really good up movement, and we have a red candle now. However, it is interesting. The weekly PPO does appear to be heading down toward the red signal line. We still see, however, the derivative oscillator actually increasing in upward energy. Let's hone into this just a little closer and look at our 2-day chart. Now, again, we have a 2-day candle that is forming. It is the first day of the 2-day. Derivative oscillator is already flipped over into the negative. This, if indeed the crossover ends at the end of the day on Friday, then of course we have a confirmed crossover going down on the 2-day chart. We do not have that confirmed yet. We will continue to keep an eye on that. That, of course, would be a definite confirmed signal to get the hell out of the market. We don't have that yet. Like I said, we have an up day. However, we do see lots of not good signs. We see we're very close to a confirmed crossover. That'll happen at the close of the candle, and we already have the derivative oscillator negative. So again, taking your profit is never a bad thing to do. Remember, We jumped in somewhere around the 137 point. And again, you do not want to end up losing all of that. I'm sorry, not the 137 point. We jumped in somewhere around the 134 point. So again, still up over $2. So just be careful. Don't lose everything that you gained. And when you do have a crossover going back up again, you can jump back in. It's never a bad thing to take your profit. Okay, that's where we are as we look at the Qs. Let's continue to move through these charts. And again, the Qs is the NASDAQ 100 for new folks. Let's look at TLT. That's the 20-year bond fund. It crossed over all the way back on February the 3rd, moved up for a while, then dropped over, moved up again. And of course, we had a 2-day vertical crossover going down, but we still have that up move on the weekly chart. And of course, with the last couple of days activities, we see that even bonds were up over the course of Thursday, and we have a green up candle. Now, as we zoom into from the weekly, so the weeklies absolutely crossed over. We are seeing a crossover occurring. Hasn't been confirmed yet because why? Well, we're waiting for that 2-day candle to end. The 2-day candle will end at the end of the day on Friday. I know that some of you jumped in. You had a lot of exuberance, pulled yourself in. Again, that's early. That's not following what our rules are. But of course, we are in a confirmed crossover going up on that weekly chart. And as soon as the crossover is confirmed, we will move the 2-day vertical crossover to the candle that we currently see. Now, it may change a lot tomorrow, but we'll continue to monitor that for you. That's where we are. Remember, we are trend followers. We go by our rules. We'll continue to see what happens as the market shakes out after the really bad day for stocks, at least. Good day for gold and good day for bonds on Wednesday. Now, let's keep pushing through these charts. We will go back to the weekly and we will take a look at gold. Gold was down. Now, remember, gold had surged up and gold has rotated over, going down. It has not, and when I say rotated over, I'm just talking about the candlesticks. We had that 2-day vertical crossover. We'll look at that in just a minute, but gold still in a confirmed up move on the weekly was getting very, very close, even at the end of the past week, to going down. Did not happen, has not happened yet, but the weekly derivative oscillator has gone negative in the last day. What do we see as far as the weekly chart goes? We see a green spinning top. Again, means lots of indecision. If we hone in a little closer and look at that 2-day chart, we can see that we still don't have a crossover going up on the 2-day chart. We're still looking at a negative. In fact, it's gone parallel. We're still negative on the derivative oscillator, still negative on the price percent oscillator. So we do not have a trade there on that 2-day chart. We still have confirmed, we have the schizophrenia going on, confirmed up move on the weekly and confirmed down move on the 2-day. Let's look though at our 4-hour chart. I've had some of you been really bragging on that, of course, how prescient it is and how well it works. That 4-day chart, you remember, crossed over going up back on the afternoon of Thursday, the 11th of May, and we saw it go up for quite a while. It does appear it has topped out, at least for the time being, and it seems to be rolling over and losing some of that energy. 4-hour chart is still going up as far as the PPO goes. Derivative oscillators lost some energy, so we'll continue to watch that. If indeed you were in that trade on the 4-hour chart, and you made some nice money going up again, don't let yourself lose it all. It may very well give you a confirmed crossover before you do, because you got in at a very good time. If you got in at the opening sometime on Friday, you would have, well, it's just not the opening, but sometime around 10:30, you would have gotten in around 117. And of course, it's up to, even at the close after some loss, up to 119.11. So pay attention to that. And again, continue to practice these things. That's what we're all about. We're not a stock calling service. We're an education firm. We want you to continue to practice with us. Get good at this. It is worth your time, effort, and energy. You want to know more about what we do, you need to go to our website, chartingwealth.com, see all the training that we have there. Subscribe to our daily podcast. We will send you that video podcast every single day. We'll also send you in the notes that come with that email. You will see our How to Read a Stock Chart video. You'll see our trade worksheet, our daily market worksheet, our weekly market worksheet, and the layout that we use at freestockcharts.com. We are here for you every day, and we appreciate hearing from you. CW@chartingwealth.com. Don't forget, everyone who has subscribed, we will do our bonus material, which is answering your questions, the questions that we receive both at the website via the Contact Us portion and also that email, cw@chartingwealth.com. Please let us hear from you. God bless. Take care. Be sure to sign up for that newsletter and also like us on Facebook, Instagram, YouTube, you name it. We are there for you, and iTunes. God bless from chartingwealth.com.